The government has been printing money like there's no tomorrow, but this is not a fantasy land. Actions have consequences, and we will be the ones who pay those consequences. It's no secret that pretty much every major government in the world has been irresponsible over the last year. But the question on everyone's minds is, what will this lead to? What will actually happen to us? What does the future hold? And for that, we have Peter Schiff to listen to. For those of you who don't know, Peter Schiff is a world-renowned investor who made his money predicting economic crashes, specifically the 2008 Great Recession. He's now been making the rounds recently, trying to let everyone he can find know that we are on a one-way track to disaster and there's no turning back. But really quickly, before I show you what he has to say, hit that like button, subscribe to the channel. There's going to be far more videos just like this coming out constantly that you do not want to miss.
Joining us on the line is Peter Schiff, chief economist and global strategist of Euro Pacific Capital. He's also author of the book, The Real Crash. Peter, thanks so much for joining the show. Really appreciate it.
Ben, thanks for having me on. Let me say I've been a fan of your program for quite some time, and it's an honor to finally be a guest.
Oh, well, thanks. I appreciate it. So let's just jump right in with the state of the economy. So obviously, the stock market is doing really well. There's a lot of economic optimism. GDP growth is going to be extremely high because we just went through the greatest artificial depression in American history, created by an extraneous shock event, and also governments just shutting down their economies. And now we're back into a sort of natural growth cycle that has been dampened, it seems a little bit, at least, by the government passing out stimulus checks to keep people from reentering the workforce. But there's some clouds on the horizon, and those clouds seem to be gaining a lot of force in the form of Joe Biden's massive spending packages that he's trying to push forward, no?
Well, first of all, there's nothing natural about this so-called recovery because we haven't really recovered. The economy is actually sicker now than it was before COVID. And what's really been hurting it was not the disease, but the government's cure. See, here's the problem. When governments around the country ordered businesses to close and people not to go to work, everybody stopped producing. So if you were helping to produce goods, you're not producing the goods. If you were performing services, you stop performing those services. Now, if people aren't productive, well, they need to reduce their consumption because you can't consume stuff that's not produced. But the government didn't want people to stop spending, even though it ordered them to stop working. So what happened was the Federal Reserve just printed up all this money and gave it to businesses, for the PPP program, gave it to workers and extended unemployment benefits, sent out all the stimulus money. So you have an economy where we're producing less, but everybody wants to spend more. That's not economic growth. That's massive inflation. And what we're seeing now is the byproduct of everybody spending all this money that we just printed. And that's what's goosing the GDP. But this is not a real economy. Our trade deficits are exploding. We've never seen merchandise trade deficits this high. What we've done is we substituted real economic growth, real goods production for money printing. And we're about to pay the price in terms of an enormous increase in the cost of goods and services. It's going to be like the 1970s, only a much worse economy and much higher inflation. I've been saying it's an inflationary depression, not just stagflation.
So right off the bat, Peter's telling us that our own economy isn't real, and he's right. The recession that we all saw over the last year wasn't a result of market forces, and it wasn't a result of the virus. It was a result of the government-forced lockdowns that shut all our businesses down. There's nothing natural about this. It is entirely arbitrary and has put us on an economic path that we would have never seen otherwise. We were all forced to stop working, to stop making money, to stop producing goods and services. But as Peter said, the government didn't want us to stop spending, even though it ordered us to stop working. So in order to keep spending high, the government just printed money and sent it out to us. All of this spending that we've been doing over the last year and the spending that we're going to continue to do over the next year has been enabled by massive inflation. Our economies aren't actually growing, they're just getting more expensive. No more wealth is being produced, no more services are being sold, and no more goods are being manufactured. Our economy is just inflating its way out of a government-caused recession. As Peter said, this is not a real economy. We have substituted real economic growth for money printing, and we're about to pay the price for it.
So what do you think the timeline on that looks like? Because we're looking at economic growth, at least in GDP numbers, at least through the end of the year. You have all of the economic firms like Goldman Sachs suggesting up to 8% GDP growth for the year. We are going to see people getting back into the workforce. I mean, we've seen hiring is up. So what do you think the actual timeline here is? Because there seems to be a gamble that's being made by the Biden administration, which is they can raise taxes, raise regulations, blow out the spending, do all of this. And the economy will recover to such an extent that it'll sort of carry past all of those obstacles for the next couple of years. And then if a crash comes, it'll only happen 3, 4 years from now.
Well, actually, all this government spending is inhibiting an actual recovery from taking place because whenever the government spends money, it has to deprive the free market of those resources, right? It's not the taxation that's the problem. It is the spending. Government spending is effectively taxation. So once the government decides to spend money, the question is, how do we pay for it? Now, the most obvious way is, we send the government our money through an income tax or a sales tax, whatever it is. But if they don't have the political guts to ask the Americans to pay for all the spending that they're delivering, then they ask the Federal Reserve to print money. But that doesn't mean we get the government for free. It just means the government is robbing us of the purchasing power of our money. And that's what's happening. The government is creating money, putting it into the economy, giving it to people to spend. These people are bidding up prices. And that's what's driving the GDP. It's higher prices and more spending as we are producing less, right? That's why you see this enormous trade deficits. But I get all these stories from people that email me, and I experience it myself. There is a widespread shortage of stuff. You have to order things, and it takes months and months to get them. There's a huge backlog, and prices are really going up. Now, the Federal Reserve is asking us to believe that what we're seeing is just transitory, that it's gonna blow over, and it's nothing that should concern us. But this is exactly what the Federal Reserve said in 2005, 2006 about subprime. They told us, ignore what's happening in the subprime mortgage market. It's contained. It's not going to be a problem for the mortgage market. It's not a problem for housing. It's not a problem for the economy. Just ignore it. It's no big deal. Well, the Federal Reserve was completely wrong about the subprime market being contained. They're now just as wrong, if not more so, about inflation being transitory.
So Peter said how the government spending is actually getting in the way of our economy and its recovery, and he's actually right here. The government spending is just another form of taxation, as all that money has to come from somewhere, and it either comes from taxing the populace, which takes money away from those who spend it in the economy and drive growth, or they get their money by devaluing our currency and printing more money, which has the exact same outcome. Less money in our pockets, less money for us to spend, which stops us from growing the economy. When the government prints money, when it causes inflation like this, it is really just taking money and wealth from its citizens and giving it all to itself. This is the opposite of Robin Hood. It's stealing from the poor to give to the rich. We all know that you can't just magically create wealth. It isn't possible. So the question has to be asked, where does this wealth come from when the money printer is turned on? Well, it comes from the devaluation of our currency. The money that we hold in our wallets or in our bank accounts becomes worth less of what it used to be, and that excess value goes to the government in their freshly printed dollars. This is just another form of taxation, but one that most people never see. That's why the government uses it so much. Peter explained to us how our economies aren't actually growing, how we aren't actually more productive, we aren't actually wealthier. It's just that the number of dollars in circulation, the number of dollars in our economy have increased. This is obviously going to increase our GDP figures, which appears to be all that the government cares about. But we aren't better off, we aren't richer, we aren't all able to go out and buy brand new huge houses or expensive cars because they've all just gone up in price as well. Until the government gets out of the way and lets the economy recover in its own manner, then a true recovery, a real recovery, is not going to happen. I'm going to come back to this interview, show you guys the rest of it, and explain what Peter is talking about again in more videos over the rest of this week. So make sure you subscribe to the channel, turn that notification bell on so you don't miss the next video, and like this video to help it get out to as many people as possible. Thanks for watching, until next time.